Welcome everyone. In this video I'm going to talk about how does a stock market work. If we take a quick look at the agenda, I'm going to talk about the history of the stock market, what's an ownership of a company, and what's an equity, otherwise stock, and what's stock market exactly about, and what's in return, what do we get in return. All right, so let's get right into that. History of the stock market. In 1600s, Dutch East India Company invested hundreds of ships in trading gold, porcelain, silk, and spices. So running this massive operation was not so cheap. It was so expensive. In order to run this massive operation, the company turned into individual investors who could invest money in return of shares of profit. So the company agreed to share some profits from the ships for those who invest in the company. So by doing this, by practicing this, the company managed to have even grander voyages where they could travel to most of the areas around the world, which expand the business and also which increase the profits and the revenue. So as the practice was doing really well, the company was selling the shares in the coffee shops and also the shipping ports. So by doing this, the Dutch East India Company invented the world's first stock market. That's the history of the stock market. So if you are new to the channel, please do consider subscribing the channel and click the notification button where you will get notifications once a new video is uploaded. So now if we go to the second topic, which is what's an ownership of a company. So a company can be owned by one or many people, or one or many individuals, one or many parties. If we take as this example, let's say XYZ PLC company. So it owned by two individuals, two investors. So the ownership is a portion each investor own in company. Investor A own 50% and investor B own another 50%. So the companies can sell ownership to private investors in many different ways. But going public is where the stock market involved. If the company has to go public, that's where the stock market will involve. So you have to go public, we call IPO, initial public offering. That's where then the public investors can purchase, can buy ownerships, we call stocks from those companies. Okay, let's have a look at the next one. The next is what's a share, what's a stock. The shares represent equity, ownership of a company or a financial asset. Okay, if we take this company which is having 100,000 shares in the company, so out of the 1,000 shares, 100 shares will account for 10% of that company's ownership. So if you purchase 100 shares of this company, you will own 10% of that company. So most companies have shares, but only the shares of publicly traded companies are found on the stock exchanges. And also companies issue equity shares to investors in return for capital, which is used to grow and operate the firm. Once you sell the shares to the public, and by doing that you collect the capital. This capital will be used for the growth of the company and also to operate the company. Okay, now let's have a look. What is the stock market? Companies can raise money from public for its expansion or development. This process is called initial public offer. So as I explained earlier, as I mentioned earlier, going public is called initial public offering, which is very famous as IPO. So the companies can raise money by doing that, and the stock market is a place where the buying and selling will happen for those publicly held companies. So actually there can be one or multiple trading exchanges in a country or region. As an example, if we take US New York Stock Exchange, Nasdaq Stock Exchange, Chicago Stock Exchange. So such kind of different stock exchanges can exist in one country or in one region. So these exchanges operating in a country will form the stock market, right? So if we see, this is the stock exchange and then the investors are here, who are the public investors. Of course, there will be broker firms who connect the exchange and investor. So that's how the trades will happen. So through the broker, the buying and selling will happen. So it's not always that every country has many stock exchanges. Some countries, some small countries may have only one stock exchange, and then of course some countries will have multiple stock exchanges. Next, so what is in return? So if you look at, let's say, if it is a fixed deposit, there are ways that you can invest your money. So fixed deposit is one of those ways. So if you deposit your $1,000 or $10,000 or $50,000 as a fixed deposit for a specific period, there'll be a specific interest that you will get once you complete your maturity period, right? So that's the return you gain from that fixed deposit. So when you invest in the stock market, what do you get in return? First is dividends. These are the profits of the companies earns and distribute as cash among the stakeholders according to number of shares owned by. So the dividends will be one of the way the companies will share the profits, not 100% that they own, a portion of that. But it is not mandatory. Every company will have to pay dividends. So it's not common always that, especially if you look at the US companies, you may not find much that pay dividends, because the next return is capital growth. The shareholders may enjoy the capital gain if the value of the company rises. So if the company will have positive earnings and maybe great plans ahead, so this will invite more investors, more individuals to buy the stocks. Of course, that interest will create a better value for the company, where the stock price will rise. So such way the investors can get a capital growth. The next is the buybacks. Of course, this is basically for the company. And the companies buy back shares when it has a huge cash pile or consolidate its ownership. So the company can buy back their own shares. So by doing that, of course, their ownership, their stake can be consolidated. So these are kind of different ways the returns will be gained. If you look at, yes, the capital growth is the most common gain. And also if you look at, yes, you may find some companies that pay dividends, but if you look at, you may not be able to reinvest that dividend in another company and gain a better return. But what most companies do, if you look at Apple, Facebook, Google, they don't pay dividends. They reinvest in the company, but the capital growth, by doing that, they can deliver better capital growth. So that's how the investors get return. Basically, that's it. That was a quick overview about how the stock market works. There are many detailed things. There are many detailed information, in-depth knowledge. And if you are an investor, of course, if you are new to the market, so this I hope this will be helpful for you. So if you are new to the channel, please do consider subscribing the channel and click the notification button, where you will get notifications once a new video is uploaded. And if you like the content, do like the video. Happy investing.